Hey everybody, it's Brian Shannon from AlphaTrends.net, and today is Friday, the 30th of April. I hope you had a good week of trading. The market was kind of mixed bag here. Semis lost the most, down 2.5%. Bonds lost a little bit of ground. Energy, however, is back in business. We'll take a look at those guys because I think looking forward to next week, they will probably provide some opportunity. Let's take a look at the action. We are in the middle of earnings season, so we saw, for instance, Facebook reported this week, and Facebook had a large response to those earnings, large positive response, whereas Twitter, not so much. These guys got hit pretty hard here today. So it remains a little bit of a mixed bag for individual equities during earnings season, as it always is. But we also got through a Federal Reserve meeting, and this market is still holding around this near-term level of 417. Below that, the bigger level is 411, and that's approximately where we'll see this volume-weighted average price from the low in March, still rising up to maybe meet that market up around that 411 area in the next week. It should be able to continue up. But of course, we're still above a rising 20-day moving average, 50-day moving average, and that's the 200-day moving average way down there. The Nasdaq still clearly in a great uptrend, holding this key level. We can just extend that across basically and see that this prior band of resistance still holding as support. If it were to break decisively below about 334, then I think you've got a good chance we would see continued selling down towards about the 330 level, which is the volume weighted average price off of this low in late March. There's nothing here indicating that that's likely. Just be aware of the potential scenarios. The Russell 2000 tried to break higher this week, and it's a little bit iffy whether it's going to hold. Now, this is kind of the band of resistance, and it seems as though it kind of fell back into it. Let's take a look at that on a 65-minute chart. So this was that band of resistance I was just talking about, and you can see that when you drag it straight across, it's clearly fallen below it. We're also below a 5-day moving average. So the Russell 2000 seemed like maybe it had the chance to play some catch up this week to the other indexes, as this has been a little bit of a laggard recently. But we're still, still giving the benefit of the doubt to the buyers because clearly we're above a rising 20 and 50-day moving average in a longer-term uptrend. The semiconductors, as we just noted, lost a little bit of ground this week, right back down to the range that they were in last week. So, we're kind of in this bigger box of 241-ish up to 255, and as long as we're within there. We've got the year-to-date volume-weighted average prices, this thick blue line. Maybe we test that next week. I'm not nervous about the semiconductors at all because the primary trend is higher. However, we do have to be aware that we're below that month-to-date volume-weighted average price. We're below declining 5-day moving average. And if we are to see something maybe like this develop next week where we get about, maybe we just undercut this ever so slightly, that is, on Monday, and then rally up. So suck in some shorts who are late to the party for this sell-off. Then rally back up over the next few days. And then if we were to come back down, I think it could be worse. So be aware of a scenario that might look something like that and take the appropriate actions for the time frame that you're involved in. Biotechs actually did okay when you consider Amgen, for instance, got hit pretty hard this week. Amgen dropped from 256-ish down to 235 on what was most likely an earnings report. I didn't see the news there, but it's good to see that the 50-day moving average is so far holding this market. That 50-day moving average is declining and will continue to decline for the next week and a half or so. This is where we were 51 days ago, so we'll start getting rid of this data in the 50-day moving average calculation. I kind of like that they've pulled back this week, and if we can see some support forming at the conjunction of this 20-day moving average, which is coming up to the 50, and we've got that year-to-date VWAP overhead, I think that maybe next week we see that the biotechs kind of just bide time in this general area and then perhaps would be in a position to build some energy for a bigger break higher as we're starting to see some higher lows and these moving averages are rallying again. The biotechs might become an emerging area of strength. The financials, another strong week for this group. They just continue to add to their gains from that breakout that we saw back earlier this year, and still clearly above that rising 5-day moving average, meaning only a fool would short it for anything more than a quick scalp intraday. And the market seems like it's up too much, but it keeps going higher, so you can't short it. Financials, energy, as I've mentioned, we got back above the volume weighted average price from the peak. It was a little bit extended as it got there, so I was suggesting Alpha Trend subscribers, we don't chase this strength here over the last Wednesday and Thursday. We got a nice pullback to the 5-day moving average. This will be a group that I'll be monitoring next week for some potential upside. We've got, if you looked at my Twitter this week, I wasn't very active, but I put Twinkie on there. Twinkie is behaving okay, as is POWW. So Twinkie has a big short position. POWW still looks good in here. I think those are the only ones I had mentioned really on Twitter. So I'll just leave it there for now, and I've got a lot of ideas for subscribers for Alpha Trends. If you haven't taken a look, feel free to come take a 2-week trial, alphatrends.net. Thanks.